Jason, good evening. How are you?
All is great. All is wonderful. How are you?
It's great. I just finished 18 holes of golf, walked 18 holes.
Feels pretty good, eh?
For the third time in 6 days.
Nice.
And I haven't fallen apart just yet, but
little sore.
I need some Advil.
Yeah,
absolutely. But
nice.
But yeah, the weather's finally getting nice. We're getting into May, and the summer's coming. So it's been a long winter.
That was a typical classic old Canadian winter, right?
That was a tough one. That's a tough one.
Long and tough.
Yeah. Speaking of long and tough right now, we're going to get into the topic du jour. For those out there, we are filming this on April 23rd. So with Donald Trump and the Trump administration, you never know what's going to happen day to day. But we do want to talk about the biggest, I think, news that's happening right now, which is the U.S. Canada, the tariff war, the U.S. tariff war against the world. We're going to talk about that on this show today. We're also going to get into how the stock market is affected by the tariff war, Jason. But you think about this, right? For the last month and a half or so, you've got the U.S. government, Donald Trump, talking about taking over Canada, the 51st state. And of course, we did have the USMCA agreement that Donald Trump put in place back in 2018. That obviously is long gone. He's breaking it up with Mexico and Canada, and we're going to get into this tariff war. But there are some big issues that are going to affect Canadian companies when it comes to a tariff war, Jason. And we'll get into these key topics right now. But the first one here is potentially the economic slowdown. So Canada really is dependent on its exports to the U.S. So right now, about 75% of our exports are heading down south, and obviously with increased tariffs, that could lead to reduced demand, hurting Canadian goods, hurting Canadian manufacturing. Some of the job losses that are expected, and one of the big ones that I think really bothers Canadians and governments right now, and we are going into an election, or we just. Again, today we're going into the election next week. We'll have it by next week. But the automotive industry is really taking a pounding on this slowdown, and also to lumber. So you could see layoffs and closures from those types of sectors. The second big thing here is supply chain disruption. So Canada and U.S. have a deeply integrated supply chain, and tariffs could and will disrupt these networks. Obviously, when you've got supply chain disruption, you're going to have increased costs for Canadian businesses that are going to source materials from the U.S. So if you're a Canadian company and you're buying a lot of your material in from the U.S. and you're paying that 25% tariff, your price goes up and your margins go down.
Yeah, and the supply chain issue was front and center with COVID, right? Like, we forget quickly how bad things can get when certain things take 6 months to get here, right? So that can be a big issue. Some of the other issues, biggest threats to Canada are obviously, as you just mentioned, the increased cost to consumers. So that's probably number one on people's mind. With higher tariffs on imported goods, that obviously could lead to increased prices for Canadian consumers. Some of the sectors that might be affected significantly: electronics, clothing, food, all the main staples for us to consume. So we could be in trouble. Could have some increased costs on some of those items. One of the other threats is a trade diversion. So we talk about 75% of our trade goes down to the south. Well, can we find other places that we can trade with? We're talking to European countries now. We're talking to Asia, but it's not that simple to just be able to divert and start selling our products somewhere else.
One of the amazing things you've learned in the last 6 weeks or so with this whole trade talk is how Canada, doesn't even have free trade with its own provinces. I don't understand how that hasn't happened. But I will say one thing with this whole trade issue that we're facing right now with the U.S. It really is you're poking the bear, right?
Yeah.
So Canada as a country, I think, had to take a good deep look at itself and say there's a lot of things that we're not doing very well. We've been sitting there with our head in the sand for the past who knows how many years, 5, 10, 15 years, and this is really getting us thinking about the future of Canada. I mean, we are really an energy superpower, and we're not going to make Apple iPhones here. We're not going to make computer chips and so on. But what we do have is energy, and let's start getting things in order and getting these pipelines built, and let's get Canada producing the energy and the resources that we can produce.
Agreed.
Number 5 here on some of the biggest threats to Canada and its trading relationships is retaliatory measures. So, obviously, if Canada imposes a tariff on the U.S., Donald Trump being the reactive president that he is, he's going to obviously react by adding tariffs to Canadians. This does nobody any good, and I don't understand how, even with the whole China-U.S. Tariff issue, is I tariff you 125%, you tariff me 125%. Like, what good does that do? Exactly. Except that it hurts Americans and the Chinese consumer. Number 6 here is investor confidence. Again, investors, investors like certainty, right? When there's uncertainty in the market reacts accordingly. So right now, a prolonged tariff war could lead to uncertainty, reducing foreign investment in Canada, and investors typically want to see, things that are stable and predictable here. Also, too, unstable trade environment could deter investments as well. So again, Canada right now, we need things to be consistent and fluid moving forward.
Agreed. And some of the key, like the impacts on some of the key sectors, we've got agriculture, we've got the automotive industry. You just talked about some of the parts go back and forth a few times through the United States, so it's a real issue. You've also got some of the political and diplomatic situation, right? We just went through the election, but how are we going to be able to negotiate and talk to Donald Trump? It's not going to be easy, no matter who is in power here in Canada.
Yeah, I think you have to give him a win. So whatever it takes to give him a win, make him look good on TV. He's what did I say? He's the he's a reality TV star, right? At the end of the day, he was a builder, and he did some things in New York with his building. But I've heard a lot of folks say he created his identity with the The Apprentice.
The Apprentice.
So for him, it's all about, do we get eyeballs? Are people watching the show? And
showmanship, right?
It's not a way to run the government.
Yeah.
Number 9 here on some of the thoughts around the threats around Canada's trade wars is currency fluctuations. And it's funny right now is, we've seen that our Canadian dollar just go down and go down and go down and go down. And, for those that spent the winters in Florida, I mean, I don't recall when our dollar's been as low as it was. Yeah. However, with trade tensions, you do increase the volatility in the Canadian dollar, impacting, obviously, imports and exports, again, creating more uncertainty. But I did notice, Jason, that in the last month or so, we've seen our dollar get a little bit stronger. Yeah. So it's not a lot, but I just checked it before the show today, and the dollar is trading at about 70 cents to the U.S. dollar as of a month ago. And now it's trading at a whopping 72 cents. So It's not a lot, but at least it's not going 68, 66, 64. So
and there was lots of talk of that before Trump got in. There was lots of talk that we were going to see a 65-cent dollar, right? So,
well, I always say that when the dollar goes down, it's bad. When you go shopping in the U.S., you take a travel or a trip down south, it's painful, but it is good for your portfolio. So hopefully we'll get a dollar that's within, I don't know, what's normal parity, mid-70s?
Mid-70s,
might be a good point. And the final point here is the impact on small business. This is where it really is, it's staggering, right? Is small and medium-sized enterprises that lack the resources to absorb additional costs or are unable to diversify their markets are going to face severe challenges and potentially leading to closures. And I heard one guy talk about it. He was importing some merchandise, and his tariff import cost was 25%. And he said, I had to pay a 25% tariff. It was close to $100,000 just to get his shipment released. He said, I had to pay the $100,000 to get my shipment. Haven't sold one of my products yet. So there's a lot of that with medium and small size businesses.
Yeah, it's uncertainty. That's the issue, right? It's one thing if we know what's happening. He says 25%, let's go, but tomorrow he changes his mind and it just creates too much uncertainty.
Well, again, as of today, we've seen the market in 3 days, get crushed on the I guess the 21st. Did great in the 22nd of April, and it did great in the 23rd with a bit of positive news. But Jason, let's talk a little bit about the market, because again, a lot of clients call us wondering, what do I do with my money? I've got my portfolio. Do I move it? Do I sell it? But one of the things we talk about is, unlike other times, this is very fluid. Where one tweet or one post on his social media site could change the market dynamics. But we've talked about this before, is you've just got to stay invested and weather the storm.
Yeah, exactly. And we talk to our clients all the time about not panicking. And there's some good stats here that the S&P, so that's the S&P 500, the major indices in the United States. If you invested $10,000 20 years ago, if you stayed in the market, we've had the all-time worst financial crisis in 2008. We've had COVID in 2019-20. We've had other recessions in between then. But if you were fully invested for those 20 years, you would have made about 10.4% over those 20 years annually, which is pretty good.
Which is fantastic.
But if you've missed even 10 of the bounce back days, so as you mentioned, yesterday you're down 1,000, today you're up 1,000. If you've missed 10 in the span of 20 years, if you've missed 10 bounce back days, your rate of return is only 6%. So going from 10.4% down to 6%. If you miss 20 of those bounce back days, you're looking at a 3.5% rate of return over 20 years. And finally, just if you've missed 30 of those days, so again, you're in, you're out, you're not sure what's going on, and you've missed 30 of those days, which is not hard to do if you're in and out, you're basically flat. You made 1% annually over 20 years, which is, you might as well put it in your mattress.
That's amazing, right? Just missing 10 days over 20 years. I mean, that's one day every 2 years. If you just pulled the money out because you got freaked out by the fact that it maybe pulled back 4 or 5% in a week, and you missed that rebound, just that alone takes your returns from 10% down to 6%, which is more than a 40% discount, right? So
think about that every year for 20 years, 4%.
What's the long-term impact of those panic moves, right?
Exactly.
So, the market does like stability. The market does like earnings, but, there are some headwinds facing the market with the tariff war. And one of the headwinds is going to be, increased costs for companies. So if you're a company and all of a sudden your price goes up by 25% just to manufacture your product, depending on your margin, some companies work on a 5 to 10% margin, right? Yeah. So, if you're that company, you got to weather the storm. Maybe you got to pay the tariff for 3, 6, 9 months until we get this figured out. Obviously, we're going to have a new government in Canada, which is going to be helpful to try and negotiate maybe a new free trade agreement. But, increased costs are definitely going to be a headwind for investors. Lower consumer spending. The one thing I love to always say to clients is, stocks follow earnings. So when earnings are strong, stocks typically go up. When earnings get soft, stocks typically go down. But you've got consumers, Jason, that are looking at it going, maybe I don't want to buy that new car, or maybe I'm not going to do my renovation, or maybe I don't need to go on a trip, or whatever it may be. So again, there's a lack of confidence, and it's amazing, right? So we're sitting here, end of April, beginning of May, and everybody's in a very negative, low confidence mood, I guess. Yet 2 months ago, people's mood was incredible. It was high flying. Markets were doing great. It's amazing how over the course of 6 to 8 weeks, people's mood can change.
Yeah, exactly. And this kind of leads into the third point of how it affects the stock market, which is uncertainty. And again, we just talked about it. The thing that the market hates the most is uncertainty. So these tariff wars can investors dislike uncertainty because it's hard to predict. It's hard to predict how the businesses are going to perform. When investors are nervous, they might sell stocks. They might panic, and that of course drives down some of the stock prices. Yeah. Another negative effect is of course the impact on global trade. I mean, same idea. It leads to slowdowns, which affects many of the companies. Like you said, we're not going to spend as much, which can obviously harm the overall market performance. So all kinds of different things can alter this stock market.
And you think back to when Trump got elected, one of the big thoughts is that he was going to be the pro-business president. He was going to cut taxes, cut regulation. Trump looks at his presidency in lieu of the stock market? How does the stock market perform? He, a lot of his friends are multi-billionaires. I'm sure they're taking a massive haircut these days. Look at Elon Musk. He's running Doge right now, and I think Tesla stock is down 50% from its high. I mean, I'm not sure how much he's lost, probably in the tens of billions, maybe $100 billion plus. But so he comes in as this guy that's going to drive the market. And that's why I think speculation and prognosis, the guys that are putting out there what the market could do, it would have been a good year this year, right?
Yeah.
But it hasn't been a good year.
Exactly.
Another key point here on some of the issues with the stock market is the volatility in the markets. Obviously, like we're seeing it, right? Like yesterday, it's down 1,000 points. Today, it's up 1,000 points, down 1,000 points. So massive volatility in the stock market. And the final point here, which we mentioned, is investor sentiment. Negative news about tariffs and trade shakes confidence, and investors are now pulling back. Now, however, I will say one of the good things is there's a lot of money sitting in the cash accounts these days, cash markets. So, when you do get some positive news, hopefully China and America comes to a conclusion on their massive tariff issue. We get a bit of, maybe we get Japan coming to the table, making a deal with the U.S., other countries, Europe, and so on. Canada and Mexico get the free trade agreements redone. That could obviously just catapult the market to new all-time highs, hopefully. So as I've been saying to a lot of clients, don't judge a book by the first chapter. We're into chapter 2 or 3 right now. There's 10 chapters in the book. It's a long year. Yeah, you know what? Q1 was okay. It was flat. Q2 is going to not be very good. Hopefully we get a better Q3, and hopefully we get a stronger Q4, and then calmer heads prevail, and the market continues to move forward for years to come.
Agreed. And don't panic.
Don't panic.
Don't panic.
Jason Pollock, again, thanks for coming on to the show. Really appreciate it.